Hello friends, my name is Dr.Bharath Chandra. We had mentioned in our videos that there is a shortage of oxygen for COVID patients all over the country, and hence the shares of companies producing oxygen are rallying. Today's video is very interesting. Please see to the end and let us see why the video is interesting. Mumbai-based Bombay Oxygen Company's share price has gone up 13 days continuously out of the last 15 trading days. The stock price history is as follows. 25th March, it was quoting 10,000, 26th March, 10,301, and 1st April 11,255 as the news started building up regarding COVID second wave. 7th April it reached 16,916, and then 12th April 18,421, and finally on the 20th April 23,346. 19th April, it had actually reached 24,574, and there was a 5% lower circuit on 20th April, so ended up with 23,346. So all of us will imagine that it is all because of the oxygen supply that is at fault and that is at short supply, and hence this particular company is making more profits selling more oxygen. 25th March 2021, it was 10,000. 20th April 2021, it is 23,346, and 3 weeks returns 133%. And again, now going back one full year, try to understand whether the company was going up similarly in the past. Look at the date, 25th March 2020, stock price was 9,508. 25th March 2021, stock price is 10,000. 1 year returns are 5.2%. If you look at this 1 year returns in the year 2021, it has given only 5.2 returns, as against 3 weeks it has given 133% in the year 2021. You may be assuming that the stock price has gone up because Bombay Oxygen provides oxygen, and hence its stock has rallied due to more business during the last few weeks during the COVID second wave. However, the truth is totally different. The full name of the company is Bombay Oxygen Investments. People read only Bombay Oxygen, they started investing. It is a non-banking financial company. Until August 2019, it was in the business of manufacturing and supplying industrial gases such as oxygen, but it stopped the gases business from August 2019 onwards. Now the company has investments in shares, mutual funds, and other financial instruments, and receives its income from these investments. However, retail investors, as usual, did not do any research before investing. They invested in the company only because it has the word oxygen in its name and not because of its fundamentals. They did not even read the full name of the company. Now look at the financials. March 2018, 8 crore profit. March 2019, 8 crore profit. March 2020, total income is 4 crores and net profit is minus 19 crores. In various social media platforms, manipulators publish this company as an oxygen manufacturing company, and hence the blind investments by retail investors. The market capitalization of the company is only rupees 350 crores even after the rally. So it is an extremely small cap company. The daily volumes of shares trading is between 20 to 500 shares the last 1 month. On 20th April, the manipulators have started selling shares of the company. It fell to lower circuit of 5%. Since these manipulators accumulated lot of shares, They will sell large quantities every day, and retail investors will not have a chance to sell their shares until a significant fall in price. This is the graph of Bombay Oxygen investment. See how from 25th March of rupees 10,000 it has gone to 23,346 in the last few days journey. Only 2 days it has declined, one time 10%, another time 5%. Retail investors who bought these shares blindly around rupees 20,000 will be trapped permanently. This is a classic example of share cornering. We need to see what happens in the next few weeks. Most likely, the stock price will continue to fall. This is called pump and dump technique. It means that the small company's shares price is artificially made to rise because of the constant buying, and that is called pumping. And then once it reaches a high level, manipulators dump, sell the shares, and it starts hitting lower circuit every day. Although this is totally illegal with the standpoint of SEBI, people still do it with extremely small companies. What are the lessons to learn from this particular example? 1. Don't blindly invest by seeing the name of the company. 2. Don't blindly invest because you heard about the company on WhatsApp, YouTube, TV, SMS, etc. 3. Do fundamental analysis and technical analysis before you invest money in stock markets, and visit various websites before investing any money. Even now, many people buy shares of Reliance Communication, rupees 1.55 per share, and Reliance Capital, 9 rupees 65 paisa per share, because they have Reliance name in it. They actually wanted to buy Reliance Industries. And many people still don't understand the difference between Anil Ambani and Mukesh Ambani. Whereas Mukesh Ambani is still doing extremely well, Anil Ambani has gone almost bankrupt. Above companies are part of Anil Ambani group of companies which are not doing well for many years. Similar situation had happened around year 1999-2000 during the dot-com bubble. People blindly purchased any company shares which had technology or software kind of the name. Finally, they lost huge amounts of money when the dot-com bubble burst, and those people took a oath that they will never ever invest in stock markets. Friends, if you are not the member of Dr. Bharath Chandra channel, this is the time to subscribe, press the bell icon. If you like the video, share it. If you understood something very valuable because of this video, please type understood or you in the comment box. We have done research on this particular video. If you like the video, then please press like button. Thank you for watching the whole video. Bye bye and all the best.